Okay, everyone, we're going to get started. Those who will come late will join us shortly. So I'm going to open the call officially. Um, Steven, are we good to go in terms of recording?
From my side, I'm a recording, so if you want to start, I think it's fine.
Okay, perfect. Hello, everyone, and welcome to the 88 MPH community call. My name is Whipper, and I'm a crypto enthusiast and an 88 MPH community volunteer. We have an exciting call lined up for you today, and it's our pleasure to host Idle Finance. A couple of reminders before we get started. When you're on stage, please keep your mic muted unless you're speaking. If you have questions, please feel free to raise your hand so we can bring you up on stage. Our Q&A section will run at the end of the call, and a quick reminder that we will be closing the call with a $100 raffle giveaway to one lucky listener, so please stay tuned to the end. On the agenda today, we have a deep dive into idle finance, high yield opportunities, and we'll be discussing 88 MPH V3 on Rinkeby. So please sit back and relax and enjoy the call. With that, I will open this up to Matteo. Matteo, if you can start us off with a quick introduction into idle finance, who you are, a little bit of background, and what sort of brought you into the crypto space.
Absolutely. So, first of all, thank you so much for having me here. I really love the 88 MPH product, and I really like also the community. So, a little bit more about Idle and what we are, especially the founding team. So, Idle is a DeFi yield aggregator and rebalancing protocol. We are aggregating different lending protocols. The most solid one in this space, Compound, Aave, and YDX, and we are algorithmically and automatically allocating funds across those different protocols in order to either optimize the returns or minimize the risk for our users. About the founding team, and we are three co-founders, all from Italy. Actually, we are like old friends. About me, I have a background in economics and finance, and I've been working in the financial risk advisory sector in the last few years until I dropped that out to go full time on crypto and DeFi. I actually entered in the crypto space at the end of 2015 because initially because of Bitcoin, I was really curious as a finance student to analyze this kind of new asset. And then I remember with the other co-founder, William, the CTO of Idle, we, as I said, we are longtime friends, and we are that kind of friends that just like to build things together. So we were used to like just hang out together, surf the web, and try to get inspiration from different things that we were finding. And I really remember the time when he showed me the Ethereum website and the Ethereum blockchain, and he told me about these smart contracts, which for me has been kind of the haha moment, because I remember at that time I was completing my studies in finance, and I was researching about arbitrage. And at that time I was researching different types of arbitrage, triangular, double arbitrage. So I really felt that like smart contracts, especially with the discrepancies that there were at that time on prices for the crypto assets, I really felt that smart contracts were the perfect fit for applying arbitrage. So we started doing that, and that's how basically we gained a lot of knowledge on how to jam with the EVM, the smart contracts. We learned a lot about PGAs, price gas auctions, and that kind of gave also us the initial knowledge to then build out Idle, because Idle, we started like thinking about a way to automatically allocating funds across different lending protocols, because when we were doing this kind of arbitrage bots, we raised some funds with friends and family in order to test out that product, and we saw that for sometimes the funds were not used, were actually idle. So we decided to actually explore the lending protocols in I think it was beginning of 2019, and at that time there was only Compound, the very first version, the white paper for BZX and the YDX. So we started looking at those lending protocols because they were perfect for having like applying an interest-bearing token to the arbitrage bot that we got. So we started like introducing lending protocols into this arbitrage bot, using them in order to make those funds work when the arbitrage opportunities were off. So after that, we actually realized that the product that we were building as an automation to the arbitrage bot was actually even more scalable than the arbitrage bot itself, because the arbitrage opportunities are not that scalable because like if you manage a lot of funds, you have to dilute the profits across all of those funds. So basically the arbitrage bots were now like scalable. But we realized that actually with the automation that we were building for the idle funds, that kind of product was really scalable. So we decided to build the automation and a clear dashboard for users to use that kind of automation. We set up all the smart contract architecture to do that. And then, we wanted to go to the market with this kind of product. So the very first thing that we decided to do was to apply to Gitcoin hackathons. Thanks God, there was a lot of like Gitcoin hackathons. And in July 2019, we won a Gitcoin hackathon. And then we got, after that hackathon, we got an initial like boost of inspiration in order to build up and improve the protocol that we were building. Of course, at that time was a really early version of Idle, and there was some flaws that we wanted to solve. And so after that hackathon, we got contacted actually by Consensus. We went to New York to do an acceleration program where we actually met a lot of other great minds, and of course the Ethereum community, which actually is also one of the main driver of our motivation for building Idle. I remember in August 2019, I went to ETH Berlin because I actually wanted to give in the hands of the users the product. And I really, really enjoyed the community there, the hackathons that they were doing there. So I got really stuck into the Ethereum community. I'm really proud to the decision that I made. So that was a little bit of like backstory of the protocol.
That's amazing, Matteo. I love that introduction, and I think it's giving us sort of like a little bit of a backdrop into what our next segment will be after we get a small introduction from 88 MPH. We're going to do a little bit of a deep dive. But before that, I'm sure that we have been joined by several people from Idle Finance. So I just want to pass it off to McFly real quick. If he can just give them a quick summary and small intro into 88 MPH, and then we'll take it back to Matteo and we'll continue on.
Yep, sure. Hey everyone, welcome at 88 MPH. I'm McFly, co-founder of this protocol, allowing you to earn fixed interest rates on your crypto and stablecoins. We are running currently on Ethereum mainnet, and we are cooking a V3 with a lot of improvement regarding user experience and the way all of that works. So we will be super happy to onboard you as soon as possible on this new version. So yeah, stay tuned with us here or on Twitter.
Thank you, McFly. Taking it back to Matteo, so perfect introduction. I'd like to sort of get a little bit deeper, looking for sort of a high-level overview of the project. Not really sure, you could sort of pick different topics, but maybe you could sort of touch upon a little bit about some of the different risk tolerances that are available on the different yielding products. Maybe you can even touch upon how gas costs, maybe not so much now, but previously have affected some of those things. And then maybe you could sort of talk about if you have some plans for layer 2, and then we can continue onward.
Yep, all really good points. So regarding I would say the strategies that we have in Idle, and especially like the risk profiles and the risk differentiation that we want to do with these kind of strategies. So as per now, in Idle, we have two different allocation strategies. One is the best yield allocation strategy, and the other one is the risk-adjusted allocation strategy. Basically, with the best yield allocation strategy, this strategy allows users to optimize interest rate profitability and get the highest yield across these protocols that we are aggregating without having to manually move funds across those protocols in order to chase the best returns. Um, the cool thing about this kind of strategy is that it has a dynamic allocation mechanism, because in order to optimize the returns, this strategy incorporates the underlying protocol's weight functions and levels of supply and demand, and finally determines an allocation that achieves the highest interest rate possible after the rebalance takes place. Because, if you are simply looking at interest rates prior to a rebalance, this often results in an inefficient allocation because it fails to take account of the impact of the reallocated capital. This kind of issue, we call that the ping-pong effect. Because with some protocols, or even with the very, very first version of this Bastille allocation strategy, the strategy was just looking where the highest interest rate was and was just moving all the funds from one protocol to another. But by doing that, you're moving from protocol A to protocol B. You are lowering the interest rate in protocol B, but the interest rate in protocol A is getting higher. So you can create, especially if you scale up the asset under management, you can create a sort of infinite loop where you're moving your funds from protocol A to protocol B, but now the highest interest rate is in protocol A. So you gotta go back to protocol A, but now you create the same situation, the initial situation. So you gotta go back to protocol B. So you see, you have this kind of ping-pong effect across different protocols. In order to solve this kind of thing, we introduced in September 2019, actually, this dynamic allocation mechanism, which splits the funds across different protocols, taking account of the influence that we have with the capital, in order to get an aggregated interest rate that is the highest one. That's the flagship strategy, let's call it like that. But we also introduced a risk-adjusted allocation strategy in early 2020. One, because we saw, if you guys remember, I think you are all DeFi OGs. You know that in February, between February and March 2020, we got some exploits and acts, and even now those acts are not stopping. So we wanted to also give a strategy, an allocation strategy to our user that wasn't only blindly looking at to get the highest interest rate, but also was weighting the allocation in order to minimize the risk exposure. So we basically partner up with DeFi Score, which is a framework for quantifying risk across lending pools. It's basically a single consistent value for measuring risk based on factors including smart contract risk, collateralization, liquidity on the protocol, and you have a 0 to 10 score that gives you the level of risk on those protocols. So what we do with the risk-adjusted allocation strategy is basically doing the same allocation, the same computation that we do in the Bastille allocation strategy, but then we weight those allocations based on the risk scores that each protocol has. Scheming some protocols if they have a really bad score, if it's below a certain threshold. And in this way, we can find and achieve the highest risk return score possible after the rebalance take happens. And those are the two strategies that we're working on right now, and that we have in idle right now. In terms of future plan, I think you mentioned also L2, right? So we're exploring.
Yeah, I was curious about your L2 plans, and also just for my own curiosity, and I'm sure a lot of people are wondering this. Maybe you can even talk about what happens when we're working on a Ether mainnet gas war environment where gas is so expensive. How do you guys sort of um, stay away
So
from
yeah,
losing all this profit from switching from protocol to protocol?
So well, that's a really good point, because in a sense, it's like pooling funds together for users is the way that they have to minimize the cost in terms of gas in order to rebalance funds. Because if you have to compare a single user that tries to do the same thing that the best yield allocation strategy is doing, this user will end up paying a lot of gas. So the concept that is behind these allocation strategies is that by pooling together funds, we are reducing the impact of the gas cost on each rebalance. And of course, with the capital, that when the capital scales up, this is even better because the gas cost will be diluted even more across all the LP. As per now, we have the rebalancer in idle that is paying for that cost. We have also, right now that we have also our DAO, the DAO is taking care of that cost. And ultimately in the future, since we have an architecture where there are the rebalancers that can send out allocations to optimize the allocations for these strategies, there could be in the future, and that's something more like an idea. We would like to pass from a single algorithm to a network of different algorithms that kind of like compete together in order, similarly to the keeper system in MakerDAO, but they compete together to provide the best allocations. In this way, they get a reward, but like they have also to cover the gas cost for these rebalances. So you see that there are a lot of like metrics and how can I say that, like in the algorithms you gotta incorporate the gas cost in order to be sure that you're doing a rebalance that respects also the cost of the gas in order to be profitable at the end of the day. That's more on the protocol side for the the gas war that has been running in the last months during the end of 2020. On the user side instead, since we saw that the gas cost was still a problem, even if they were like pooling funds together, so the rebalance wasn't a problem on the gas cost, but still like deposits and redeems were quite expensive. So what we did in order to face this kind of problem was to create a batched deposit and redeem system. So users that didn't want to deposit like a large amount of funds and they didn't want to afford that cost in terms of gas, they could and they can right now deposit via this batched system. So they deposit into a smart contract that then take also other deposits from other users. And then when they reach a certain threshold, if I remember correctly, this threshold should be about $50,000. The batched contract deposit the funds into idle and generalize the gas cost across these users. In this way, we thinking about the simulation that we had should be about 55% reduction in gas cost for the users. Actually, right now, the gas cost is not that high, so it's not still like a really big problem for the users. But we are also exploring L2 solutions. Right now, we are mainly exploring Polygon as per now. I don't want to close the door for other L2s. I think you guys all know that there will be, the L2 summer now. A lot of L2 solutions are coming out, especially like rollups or TDK snarks implementations. So we are exploring this space, but right now we're looking more for Polygon integration. So we're porting our contracts or the rebalancer and the strategies in Polygon.
Awesome. I have some more questions, but if anyone else wants to jump into the conversation, please feel free to just raise up your hand. Matteo, I'm wondering, I'm assuming that you guys primarily work with stablecoins only, or do you have other strategies that involves holding specific crypto coins?
So that's kind of correct, because we prefer to work only with stable coins because we wanted to give a sort of like smart savings account for our users, and the interest rates were making more sense on stable coins. Right now, we introduced a couple of non-stable coin assets, WETH and WBTC. in terms of stablecoins, we have all the major ones, so DAI, USDC, USDT, TUSD, and SUSD. And we recently also started working with RAI, the stable asset. It's not stablecoin, it's a stable asset. But yeah, we have been working also with the RAI community, and right now they also have been like just listed on Aave, so we are also working on that integration. So yeah, other than stablecoins, we have WE, WBTC, and RAI as other known stablecoin assets.
I saw. Oh, sorry, Josh. Go ahead, bud.
Sure. Thank you. So I wonder, do you have any intention to sort of on board with sort of algorithmic stablecoins or other more, I don't know, fringe stablecoins? I've seen recently over the past couple of weeks, Frax and Olympus DAO Ohm have been getting quite a lot of traction. And I wonder, this is actually an open question to both McFly and you, Matteo. What is it about, fractional algorithm stablecoins that will stop you from adding them? Is there a specific thing,
So I honestly believe that the algorithmic stablecoin space is still in development. Sorry. So of course there are like a lot of things that we need to consider, especially in terms of risk, in terms, talking about algorithmic stablecoins, the first risk is the depegging of the stablecoin. So, like with current examples, like you mentioned, Frax, we saw that like they have some security measures in terms of like the collateralization. As far as I remember, Frax has a big chunk of USDC that is collateralizing and keeping the peg to the dollar. So in some ways, they're putting some measures in order to securitize these stablecoins, these algorithmic stablecoins. But I think that is still something that needs to be explored because as far as I remember, they have like a roadmap where they want to get rid of this like collateralization in USDC, which is really interesting. But yeah, because of that, we haven't really like doubled down into algorithmic stablecoins because there are still areas that needs to be securitized, especially in terms of depegging risk. With RAI, we saw that their community and also the contracts were very good. So, but yeah, disclaimer, RAI for us, it's still like in beta version. So we are still monitoring the performances and we are still like, we don't have it in our main homepage in the dashboard because that's something that we're still researching about. And so, yeah, algorithmic stablecoins are really interesting because they don't need to have like, they have an inner mechanism to keep the peg, but still they're really early. It's a new technology, it's a new way to keep an asset stable. So we are exploring. We choose RAI because also, well, we're also friends with the team. We know Esteban from the RAI team. So, and also Emiliano Bonassi, one of the contributors in Idle Finance DAO, wanted to build a strategy on top of RAI. So that's why we wanted to experiment first with RAI. But yeah, just to conclude, in my opinion, algorithmic stablecoins are a space that still needs to be explored more and securitized, especially in terms of depegging risk.
Sure. Thank you for that answer. Yes, Frax is hybrid, right? So it has some collateralization and some algorithmic stability. I do agree that it is still early. Frax was the one I was thinking about in particular because it has yet to drop its peg. But of course, as it gets bigger and its collateralization ratio drops, that's when the real test starts. But yes, that's certainly an interesting space to watch.
Matteo, I read something interesting that Coinbase is starting to offer 4% on USDC. I was curious if you could speak a little bit about. It seems like there's a lot of competition in this space. What's your strategy to sort of stay on top of the competition? And what's your thoughts about? I mean, this isn't anything new. We've seen Binance offer high interest rates on stables, but This announcement from Coinbase was very welcomed by the community, at least those who keep funds on Coinbase. I was just wondering what your thoughts were on that.
So yeah, the launch of the 4% fixed interest rate from Coinbase has quite some like noise in the market, and that makes sense. I see that like Coinbase has a lot of synergies with Compound, and I honestly consider that a way also to start exploring the DeFi space. Of course, like if you have gone through the new product, the Compound Treasury, it's a little bit different because they're still based off the Compound protocol, but then they subsidize the if like the interest rate on Compound is not enough to cover this 4% interest rate, they basically cover that up with as a company expense, which makes sense in terms of sustainability, initial at least sustainability. But I honestly consider these from Coinbase a way to like put one foot into DeFi protocols. And this demonstrates that like Coinbase or even like more fintech or neobanks applications are really interested in DeFi applications, especially for like savings accounts. As you said, yeah, Whipper, the competition is really a big thing in DeFi, even though the composability makes it a little bit strange because you can both be a collaborator and a competitor in some ways. There is this concept of co-petition, which is a cooperation with competitors, and like this is a peculiar thing of small markets, especially developing markets. And I see these kind of things in DeFi. So of course we have competitors in DeFi. If I have to think about like other projects that have similar value proposition to the one that we have in Idle, you can find Vesper Finance, for example, or even APY Finance, or in some ways Rary Capital, even though now Rary is really focused on Fuse product. So in terms of like how we keep up with the market and competition, I think that one of the peculiar things of Idol is the simplicity of use. So it's really simple to use, and especially for other integrators, now we are really exploring the B2B market with Idol, because initially we started as a completely consumer-facing application, but then, especially during the acceleration program that we have done, we started talking a lot with other protocols, with other projects, and we saw that for them, we were solving a problem that was basically that instead of having to integrate every single protocol in the space, understanding the documentation, understanding how to allocate funds also in those protocols in an optimized way, they could have just like integrate Idle, and then we would work as a proxy to all of these other DeFi protocols. So in terms of like how we keep up with the market, we want to propose and position Idle as a sort of yield as a service solution for both protocols integrators that want to use Idle in the as an underlying technology to offer a savings account to their users, but even for more like institutional slash DAOs clients. We are also exploring a lot the treasury diversification space right now. So we are trying, on one side, we are trying to make everything as easy as possible, as much easy as possible for integrators to use Idle on the underlying as an underlying technology. And on the other side, we are talking with both institutional clients, but also DAOs, in order to understand how we can make the life easy for them when they have to diversify the treasury of their DAO. So I would say these two like markets that we are trying to target right now would be the ones that would help us differentiate us between all the other market competitors.
Great answer. We did have a question coming in from the audience. Question came in from 3S Kava. What do you think about any integration with Kashi as per your DeFi protocols?
Kashi, uh,
Yeah, I don't.
can you give me a little bit of more like context about
Um,
him?
sure. Hang on.
I think he's mentioning Kashi
Casimir.
from Sushi Swap.
Oh, I see, I see. Um, Actually,
Sorry,
yeah,
I was just literally repeating. I was literally just repeating the question.
no,
He
yeah,
did raise his hand, McFly. Maybe you can bring him up on stage.
Yep,
There you go.
I did it.
nice.
Yeah, can I speak then?
Yep, go ahead.
Hello.
Go ahead.
Yeah.
Hi there.
So my question was, like I went into the Idle Finance website and I was looking through the DeFi protocols, and I came across that you do not support Kashi as of right now. So Kashi under the Sushi Swap protocol that they have something under Bento Box. So with the Bento Box strategies, you save a lot of gas fees, and you talked about the ping pong effect. So is there any link? Can we have like Kashi on idle? And I also had like a second question. So like with DeFi mixing up with NFTs, do you have like any future ideas of like collateralizing NFTs to like do something with NFTs that is connected with the DeFi? That's my two questions.
Thanks. Both really good questions. So regarding Kashi and the basically the landing side for Sushi Swap, so we honestly have been looking at that quite recently, actually. The only thing that we have right now is that so we have a like a minimum standard parameters that integrators and underlying protocols for idle needs to respect. I think that Kashi from Sushi should respect most of these parameters, but that's kind of like the way that we are using right now to integrate a new underlying protocol in idle. So there is a proposal in the governance forum, then the proposal gets analyzed by the league's members. That if you want later I can explain a little bit more about leagues in the idle DAO, but still we have a team that is working on analyzing these possible integrations as underlying protocols, and if these integration respect these parameters, we can move forward the integration in prod. As for now, we haven't started operationally looking at the code for integrating Sushi, but that could be an opportunity. And if you want, you can drop a post in our governance forum if you want to propose the Sushi integration. I think that then the leagues team would be happy to start talking about that. Of course, you mentioned that the Kashi implementation is really low gas, and that's even better. I mean, like if it's really like it's cheaper in terms of gas, that's a plus for the integration. But yeah, there is now a process for integrating new protocols as underlying protocols. That's regarding Kashi. Regarding NFTs, so we have been talking about that internally. We're thinking if it's worth like to um, get up on the wave of NFTs. Honestly, we so as per now, we could do something with NFTs in terms of like community programs and community rewards. So giving to like community members that are really active or they are doing some specific task in the governance for idle, we would like to use NFTs to reward them and give them like a sort of like badge in order to demonstrate and like a permanent badge to them in order to say you're part of the idle community and you have done like a really and you added value to the protocol as well. In terms of collateralizing NFTs, we haven't deeply dig into that. It's interesting, but since the price, especially the price discovery for NFTs, is not is still not really efficient in my opinion because we have really few marketplaces for NFTs. So like when you're collateralizing an asset, a really important thing is to be sure that you can liquidate that asset because that's how collateral works. So I think that before going down into something like using NFTs as collateral in order to take out stablecoins and then maybe do other strategies in order to get a yield from those stablecoins, we will need to be sure that the NFTs market is enough liquid to allow everyone to use them as a collateral.
Matteo, I wanted to ask, since you have such a wide audience of different users utilizing the protocol, do you ever, would you ever consider offering a product that isn't based on variable yield, but rather fixed rates? Um, 88 MPH offers fixed rates. I'm just curious if you ever thought a product offering of that kind could ever work.
That's a really good question. So honestly, yeah, we consider that. And that's where actually I see a synergy between Idle and 88 MPH, because I know all of your strategies. I really like, you have a fixed yield, you have a floating variable yield, and then you have also the zero coupon bond. I feel that those are both all like really smart strategies. I really like them, and especially in terms of the fixed yield, I think that that's something that we can definitely explore with you guys. I would be happy to work on an integration where the fixed yield strategy in 88 MPH is deploying capital into Idle, and then we can offer this fixed yield in one of the sections that we have in our dashboard. That's definitely a synergy that I see possible.
I agree. That would be really nice. Anyone from the audience have any questions? Or McFly, it looked like you wanted to jump in there for a second. Go ahead, bud.
Yeah, I just wanted to add something on top of what Matteo was saying regarding synergy between Idle and 88 MPH. What we are cooking with V3, it's already, like, by the way, it's already deployed on Rinkaby. So Matteo, if you want to jump in a quick chat after, like, during the following days, we can take a look at what can be the proposal for offering 88 MPH as an underlying protocol for the DAO for the leagues at Idle. I will be super happy to go on that with you. But yeah, like the main goal with V3 is make Idle life, and everyone who want to build strategy on top of 88 MPH really as easy as it is to build on Aave or Compound. So it will be fairly easy for you guys to integrate this kind of protocol and offer kind of diversifications of yield streaming for your end user at the end.
That's fantastic to hear. And but can you tell me a little bit more about the V3? Honestly, I haven't dig a lot into it, so
Yeah.
I'm putting myself as an audience now. But can you please tell me a little bit more about V3, because I would like to hear more about that.
Yeah, like a quick overview is the main difference between V2 and V3 is in terms, like, just talking about developer experience. It's to have a better accountancy, better management of each deposit. You can manage rollover of deposits. You can top over deposits. Basically, yeah, a better accountancy, because right now in V2, it's really difficult for everyone who want to build something on 88 MPH to manage these kind of things in real time. When you are, like, let's say, a yield aggregator, some are doing it, but it's really a pain in the ass. At least the feedback we got from them. For example, there is Mushroom Finance, who were building stuff on top of us, and that was their feedback. And yeah, there was a lot of moving parts. So we wanted to really simplify the accountancy. So right now you can manage just one deposit, and from that deposit you can generate a yield for all your user base. So that will simplify a lot of things for you, I think. So that's the main difference between V2 and V3. And after, like, there is, like, other improvements, but it's more about efficiency or the way we de-risk the protocol. But yeah, I can walk through the main differences between V2 and V3 if you want after in another call.
Got it, got it, got it. Thanks for the explanation. But just to double check, so you will have all the same strategies that you have right now. So the fixed yield, the dynamic one, the floating one,
Yep.
and the zero coupon one in the V3. So okay. So the improvement here is in terms of the easiness to integrate it.
Yep.
Is that right?
Yep.
Gotcha. Okay, cool.
Among others, but the main one for everyone who want to build is this one, yeah, accountancy.
Got it. I see. And the underlying protocols that you have right now, where you are basically deploying the capital to then get the yield, and then via this sort of like tranches system, you're like splitting the yield across different profiles, and
Yeah, we are like the underlying protocol we are using are Compound. There is Aave and Wire, but Wire we don't use much because we weren't incentivizing a lot the deposits there. But the other one is Harvest.
Got it. Okay, yeah, no, I see both like upstream and a downstream synergy that we can have all together. Because if you're using like Compound and Aave, well, like the perfect case for using idle, because instead of like having to integrate those two protocols, even if you have also to, if you want to also tap from the interest rates that are in the YDX, for example, you can use idle as an underlying protocol.
Yep.
And on the other side, but yeah, like you see, it's both like upstream and downstream integration that we can do. But yeah, that makes a lot of sense.
Yeah, definitely.
Looking forward to see more.
Yeah, by the way, we were at the beginning when we were launching the current version we have on mainnet last November. We were discussing internally how we can leverage idle, but after we postponed the decision because like we wanted to launch that, and we just decided to go for like one simple approach where we have like one pool for Aave, we have another pool for Compound. But yeah, definitely it's an interesting idea.
Yeah, that makes sense. I mean, we gotta time the market, so I totally understand that you were kind of in a rush, so you wanted to get the product on the market. But yeah, definitely happy to talk more about how you guys can use idle as an underlying protocol as well for the upstream integration. So looking forward to that.
Cool. I will keep you in touch.
Matteo, question. Would you guys ever consider like offering a fixed rate and then trying to beat that rate using your own algorithms and sort of pocketing the difference for your token holders, so to speak? I'm not sure how it works right now, but if I understand correctly, I think it's completely distributed out. But I'm wondering if there was like a specific product type where you could offer a fixed rate and then just try to beat the yield.
That's interesting. So just to better understand, so you're saying like a product that is offering a fixed yield, but then in the underlying, we're basically using the best yield allocation strategy, and we are trying to beat the fixed yield that we are giving to our customers. And then with the excess, the excess of the yield would be like a proceed for the DAO itself. Is that correct?
Yes, correct.
Gotcha. Well, that's interesting. Of course, like if you have to think about the last 2 years of interest rates history, they have been quite volatile. So it's not really easy to. I mean, you can put a threshold. Of course, you can think about a minimum level of interest rate that you can ensure to your users. Honestly, we have been like obsessed with capital efficiency, and we have been working a lot more on the optimization side rather than this kind of logic. But actually makes a lot of sense, and that's something that we could explore in the future.
Like you can plug some portion of the assets in like a fixed rate environment, and then some a little bit more aggressive. But yeah, we should and you guys should continue that conversation with 88 MPH. I really think that there's a great synergy that's potential here.
Absolutely.
This has been a great conversation so far. I just want to remind the audience that they can feel free to jump in to make comments, questions. Just go ahead and raise your hand and we'll bring you up on stage.
Matteo, I have a question. Will you be at ECC?
Uh, that's funny because yeah, but I don't have the tickets for the conference. But I heard that a lot of DeFi people is there just also because there are like a lot of like side events. So I actually will be in Paris during that time.
Perhaps I can post it. I had the link earlier. I'll post it in the chat now. There was a big link for people who are going to ECC but don't have tickets because I think there's quite a lot of people. I assume the tickets are
Exactly.
for many.
Oh, nice.
I'll
I
post
will
it in the
check
general
that
chat.
out. Oh, cool. Yeah, I'll check that out. Nice. Will you guys be there?
McFly and I will be, yeah. I think Zephram was going to be, but don't think he can make it, and I'm not sure about Whipper.
Yeah, I won't make it either.
Oh man, savage. A long way, a long way across the pond from the US, though, isn't it?
Yeah.
Yes. So
So it doesn't look like we have any questions from the audience. I'm going to pass this over to McFly. Was there anything else that you wanted to elaborate on with regards to V3?
Yep. Before going into our topics, guys, I think there was the last questions regarding NFT mixing into big DeFi protocols. Like there was this question, I think it was for Matteo, regarding the barrier for NFT mixing into big DeFi protocol. I just as an intro to answer that, I think like we can see with Uniswap today, they are starting using NFT for managing liquidity positions. Ave was mentioning also that they are researching a way to use NFT also in their protocol. So I think we will see a lot more use cases for NFT in the coming months. I don't know, Matteo, if you have any views on that.
oh yeah, so regarding yeah, as I said before, regarding NFTs, like if we wanna merge them with DeFi, I see a good use case in terms of collateral. So that's really interesting as a concept because if you can like borrow out stable coins using your NFTs as collateral, that open up a lot of different use cases. But yeah, like the very first thing that we need to bootstrap for NFTs is a liquid market because if they will be collateral, we need to also be able to liquidate them. So that's one of the first parameters that we need to have for NFTs to be merged into DeFi. So as you said, yeah, Uniswap V3 is exploring that. So it's we can already like create markets there, and I believe that like within the next years we can see more and more liquid markets for NFTs, and these would be definitely helpful for merge them into DeFi applications.
Yep, and I think we have a last question from the audience. Go ahead if you want.
Yeah. So I just wanted to know, like you guys just said that there must be some kind of like liquidity, more liquidity in terms of the NFT market. So I had just one a simple doubt. What do you think about fractional NFTs? If we can have something like conversion between an NFT and ERC20 tokens, converting them to an ERC20 token and using the like price oracles over the NFTs to like convey the significant price over to the ERC20 tokens. I guess you're like with me right now. Huh? Are
So
you?
you're talking about like a fractionalized NFTs, right? So
Yes.
basically the ability of like selling just a fraction or buying just a fraction of
Yeah.
an NFT.
And that fraction is like an ERC20 token, so you can work on Uniswap, SushiSwap, or any other swapping
Mm-hmm.
protocol and that works there as well. Also on major DeFi protocols, like that particular token or the fractional NFT will have a value as per as the NFT does. Like the base margin value behind it would be by the NFT. Like for example, we have like a CryptoKitty. It's worth $1,000, and now we are making 1,000 tokens from that NFT. The 1,000 fractional NFTs will have $1 pegged each, and that will like go up and down according to the value of NFT going up and down. So,
Hmm.
do you think
Yeah,
that
it's a
this,
derivative of the NFT,
yeah,
basically.
yeah. So,
Yeah.
like, do you think this might work in to like close up the barrier of NFTs and big DeFi protocols?
Well, that's a good point. Honestly, like if I have to think about, because you mentioned that these fractionalized NFTs are basically ERC20. So on a technical side, I would say that yeah, this would make everything easier to implement these fractionalized NFTs. Um, I mean, fractionalized NFTs can help like moving forward this merge between NFT space and DeFi space. Ultimately, the question is where the value of these NFTs is derived from. Is it social consensus? Is it more like utility? So since the collateral, ultimately we would use them as collateral. So I think that a good conversation and a lot of like research should go also on um, where the value is derived from these kind of NFTs. In this way, we can understand also the fluctuation of the price in some ways on the on for the NFTs, and in this way we can create also use them as collateral with a certain level of confidence to be able to then have like how can I say that, like loans that have a good risk level, because like if the collateral is highly volatile and has not like a huge liquidity in the market, that's a really bad collateral. Otherwise, on the other side, if you have a liquid market, the and the collateral has a clear like price discovery mechanism where it's derived, the value is derived from the utility or other metrics. Well, that's even better in terms of collateralizing these kind of assets. So fractional NFTs helps because they are ERC20, so it would be pretty easy in a technical way of thinking to integrate them with DeFi. Uh, Still, as I said before, I think that the market should be more liquid, and the main question would be where the value is derived from for the NFTs.
Awesome questions, guys, and amazing answers. The stage is open if anyone wants to jump in. And again, I do invite anyone from the audience if they want to jump in,
I
make a
think John
comment, ask a question.
was taking a question.
Yeah. Hi, guys. This question's actually for McFly. I've looked into 88 MPH to use on a platform that I'm working on. It's like a configuration of safe wallets, and would love to integrate it into our setup. Only problem is there isn't a Rinkeby version or some kind of other testnet version, so we can test it out. Can you tell me when that might come available?
Yep, so with V2 we don't have any Rinkeby deployments, but with V3, if you go on your, you can go on our GitHub repo, smart contract repo, and you will see on the V3 branch at the bottom of the README, you have a link to the deployment of the different contract, so you will get the contract address deployed already on Rinkeby for the V3. I will share the link.
Fantastic.
I will share the link on right now on the general channel.
Awesome. Thank you.
McFly, it's back at you if you wanted to continue it all with V3 info.
Yep. So I just posted it on the general if you want to take a look. And so going back to our topics, just before diving in, Matteo, thanks for your time. Just wanted to say that. Really cool to have you on the call. So I will keep you posted with what we can build together. So if you want to leave right now, we will just go over like some internal topics with the community regarding what we are cooking with V3. Other topics related to what is happening this week in the community. So yeah, feel free to leave if you want. But just wanted to say thank you for your time.
Oh, thank you guys for hosting this event and for having me here. Definitely looking forward to moving forward also with the synergies that we can build within our projects. And yeah, actually, I think in a couple of minutes I have to drop because I have to open another call, but I will be here. I will stay a little bit here to hear about more the updates for the V3.
Cool. So yeah, I will go for the V3. How we plan to launch it, what we will launch, and also I will go over like other stuff happening currently in the community regarding conferences where we will be able to speak or where we will be like drinking or stuff like that. So going back to Rinkaby, the plan is to have a link to share with you guys this week. I hope to have it today, but probably it won't be today. But we will release something for sure where you can plug your wallet in the Rinkaby deployment and play with the UI. I can't share my screen right now, but I have in front of me the UI and the front end to interact with the different products. So hopefully we can have that in the following hours or like tomorrow if possible. Even if it's not yet everything ready, there is still bugs. So the goal is to share a link with you guys where you can play with it and you help us debug stuff and find edge cases where it's not working, stuff like that. We did already a lot of tests during the last 2 weeks, but as you know, there is probably some stuff we didn't spot it yet. So it will be really helpful for us. The goal also with this link, it will allow us to run some user tests. So probably what I will do is I will look for 5 people willing to spend around 30 minutes with me. It will be paid user test. We will give you some MPH for doing that, and we will discuss your experience. I will have a lot of questions regarding how we can improve the product or what you feel about it in different way. To make sure that we can iterate on that or in the following days or after for a following iteration. The other goal with the link, it will be to reach out to people, key partners or key influencers where we want to demo the products and make them jump on board. Like you saw real time today with Matteo from Hidl. We just discussing with other guys, building stuff also is how you can start collaboration and synergy. So the link will help us also reach out to others and start building a relationship with them. I'm already starting that since month, but as you know, like it's a human process. It takes time to chat with people, to contact them, call them. So it will ease our workflow regarding that, and we will have a good reason also to reach out to key guys who can help. We will have that Rinkaby version, so stay tuned for that. I know that I'm telling that a lot of time and we are late on the deployment, but thanks for your patience, guy. It will be worth it. The other things we were discussing this week internally regarding V3 is having a guarded launch. So what does it mean and why we want to do a guarded launch on mainnet? First, we will run the Rinkaby deployment for some weeks, at least 2 weeks. It will allow us to run Bounty with Immunify. I'm currently talking with them to set up that in the following days. So what does it mean? We will incentivize the Immunify community to take a look at our code on the Rinkaby deployment. We will publish a 100K bounty there. So we'll give them some space and time to take a look at that before releasing on mainnet, the V3. On mainnet, what we want to do is having a limit, upper limit in terms of the amount of deposit we can accept. We didn't decide yet on the amount, but the why we are doing that is just to make sure that we give enough time to the new version to be tested by everyone on mainnet. Like there is some difference, of course, between Rinkaby deployment and mainnet deployment, so we don't want to mess up with that. And the other reason is to wait. Trail of Bits will review everything we published so far in the V3, starting July 17th until August 9th. So on August 9th, we will have the report, the security audit report from Trail of Bits. And we are really looking forward to work with them to improve what we are currently doing and what we will do after, because it's kind of like a training program where you learn to do things better with them. It's not just a security audit where they give you a nice PDF and you can do your PR campaign with that. So that's the thing, and that's the goal with the Guarded launch, having something that's like a sandbox, and where we let people play with it. And at the same time, we work in parallel with Immunify. We will still have on mainnet a bounty with Immunify, 100K bounty too. And in parallel, we will have the Trail of Bits audits. So basically, that's the plan for the following, at least for the next 4 weeks. And yeah, if you want to react, like have some questions regarding that, don't hesitate to raise your hand. I will just pass the mic to Zephram if you want to add something regarding what I just said.
No, I think you covered everything that I wanted to say.
Cool. So yeah, that's the thing. So yeah, thanks for your patience, guys. And we will keep you posted this week regarding the link. And I'm just reading the last questions. That would be good to test it out. Yeah, I will keep you posted with the user testing session. Maybe we will run several ones. It's always useful to do that. So anyway, it's time well spent. So yeah, I will keep you posted. Another thing, so I'm going back to my notes, guys, sorry. We got contacts from Chainlink to be a speaker at their next conferences. The name is Smart Contract Summit. It will be held between August 7th and 9th. So it's 3 days of conferences with a lot of speakers. So we will be there. We got an invitation to be speaker there. It's a virtual event. So yeah, it will be an interesting stuff to kind of talk about what we are doing, what we can do with Chainlink. We are cooking some stuff with them, so stay tuned with that. It will be helpful for us to automate some tasks in the backstage. And the last thing I wanted to mention, I didn't post anything, but the staking rewards for every MPH stakers is still going on. So every week we have a distribution of cash flow. So this week we got 4K of cash flow in paid in DAI. So currently yielding 10% without any dilution for MPH holders. So it's pure cash flow generated by the protocol earnings. So yeah, everything, even if the market is not really making everyone happy, we still have like some real revenue happening here, producing real value. So if you have some MPH, don't hesitate to stake them here, or like you can stake them on Banker also. It's really a comfy place to be, especially right now. And I think that's it, guys. The last thing, oh yeah, just one last thing.
Pointing out that the Bancor pool has opened up quite a bit more space, and I think the BNT APY is about 80%, and the MPH APY is about 40%.
Yeah, it's still high, so yeah, it's really cool. Today I got a message from Banker team also regarding they're in transition to prepare the Banker V3. And they asked me to migrate the ownership of the Banker pool. Currently, I'm the owner of that. I will migrate the Banker pool ownership to the Banker DAO. It will ease their workflow for preparing Banker V3. So just to let you know, guys. And yeah, last thing, we are working with another e-commerce to cook a new collection of merch for 88MPH. So we did one with Meta Factory a few days ago, releasing like a limited edition of a shirt. With a new partner, we will have a collection. So we will have shirts, we will have hats, we will have socks maybe, or bags. And it will be probably ready in 3 weeks. So yeah, stay tuned for that. I hope we can have some stuff ready before FCC. But yeah, that's it.
Thank you, McFly. So with that, we're going to bring the call to an official close. I'd like to thank everyone for coming out. We will be ending off with our raffle. So I invite everyone to please join us in the general chat in the 88MPH Discord channel, where we'll ask the audience to choose a number between 1 and 100, and the person that either hits it or gets closest will win $100 worth of 88MPH. And for full transparency, we will be generating a random number within our private group here. So I invite everyone to go ahead and do so right now. Josh, if you can give me a hand just looking out for the winner, that'd be awesome.
Thing.
There's about 19 people in the audience. I think we only got like 6 responses, so I'll give you guys a little bit more time.
Good, right?
Guys, if you can put your number in once, it makes our life a little bit easier.
Okay, JDO Origins. If you put your next number in, we'll accept your next number. Because, yeah. Choose and Abraham. If you choose another number from now, then we'll choose your next number. Okay, 45. And Abraham. 99. Okay, so I think that. Are we gonna call it? Any more? 5 seconds.
Yeah, 5, 4, 3, 2, 1.
Okay, our guy, Ataz, is the winner.
Congratulations.
Abraham, it would have been you, but you put 5 numbers, so it's not you.
Yeah.
Nice, Ataz. You are the winner of $100 in MPH.
Congratulations, bud. With that, we bring the call to an official close. Thanks everyone for coming out. Please stay tuned for all of the announcements and the exciting stuff around V3. And please join us on our next call And thank you for everyone for coming out, and have a wonderful, wonderful day.
Thanks, everyone. Have a good one.
Bye, guys.